Hey everyone, welcome back to Corporate Decoder. Today we are diving into InnSuites Hospitality Trust's latest quarterly report. Get ready for a roller coaster because this report is like a hotel buffet. Some things look good, but you might want to avoid others to dodge a stomachache before we get started. If you're tired of corporate jargon and want the real deal, make sure you hit that subscribe button. Also, come chat with us on Discord. The link is in the description below. Let's jump right into the condensed, consolidated balance sheets. This is where we see what the company owns and what it owes as of April 30, 2025 compared to January 31, 2025. First, cash. They only had about $13,000 in cash at the end of April. That's down significantly from the roughly $93,000 they had at the end of January. That's quite a drop of about $80,000. Next, let's look at accounts receivable. This is the money owed to InnSuites, and it's also down from about $95,000 to roughly $119,000. Declining account receivables are not always a good sign, since it can mean that company made less sales. Then let's look at the employee retention credit receivable. This is money they expect to get back from the government for tax credits when they retained employees during COVID. That number stays steady at roughly $1.2 million. So it looks like they are eligible and expecting to get it at some point. Following, we have prepaid expenses and other current assets. They have paid for a few things in advance, but will be using it later. That number is at $181,000 at the end of April, decreased from $199,000 from the last quarter. So what's the bottom number? Their total assets decreased from $14.20 to $14 million. It's not a huge decrease to be worried, but definitely not ideal. Okay, now here's what they owe. What are their liabilities? They decreased their liabilities by about $35,000 to about $618,000. So that is going in the right direction. They are paying down a bit of their mortgage and other notes, but really a big part of their debt is coming up to be paid within the next year or before then. So watch out for that. That number is at around $470,000. Their current obligations under operating leases are about $27,000. That's reasonable and generally matches the last period. Overall, their total liabilities decreased from $13.5 million to $13.3 million. So that is good. Now, moving on to shareholder equity. The value of the common stock is a bit lower. It went down roughly $100,000. This indicates that maybe the share price has gone down as well. Overall, total equity is at $675,000, up about $30,000 from the previous quarter, $645,000. They are still not close to paying down, but is going in the right direction and increasing little by little. Okay, so we see liabilities plus equity is about $14 million. That matches with the assets. This means our balance sheet is balancing. Let's take a look at the statements of operations, which shows how profitable InnSuites Hospitality Trust was in the year 2025 compared with past periods. First, total revenue. The company did decrease year over year from about $230.2 million. But their operating expenses also decreased. $2,000 in expenses, so that's going in the right direction. So their operating income actually increased. So they managed to save a little bit and be more profitable, about $178,000 to $222,000. Next line item here is the total interest expense. That's how much they're paying on their debts, and that increased quite a bit. That increased by almost 30%. Moving on to the consolidated net income, that number went up a little bit, up from $86,000 to $71,000. Not a good news, down for the income to be coming down. There was also a BW rewards credit that took income down too. Then they had something called a tax benefit they get back in taxes. But altogether, that consolidated net income again went down. Their number also shows the money that they lost from partners that are not majority holding members of the shareholders. The company made some income but has to share since they don't own all of the shares, and that is an expense. Then finally, this number bottom line is that the net loss attributable to controlling interest, that number went from a $148,000 loss to $121,000 loss. So that is good. Net loss per share, the losses were 1 cent to share, and now they are $0.01 per share. Okay, let's look at the statements of shareholder equity. What that means is each of the owners, what they have, and how it changes over the period. The balance on the starting amount of shareholders' equity, the amount of shares they had, and other different classes were totaled at around 605 quarter. Not too bad. their shares of beneficial interest stay put and amount stays put. So things look pretty steady, really. They are really staying afloat this year, more or less. That is kind of what we wanted to see. They are not tanking and they are not growing, so they are maintaining themselves steady. Overall, not a total disaster, but also they can be doing better. There is a lot of debt there to pay down, and their shares are not doing that well. I think if they can get rid of these liabilities, they can do so much better. Hopefully their hotel continues doing better than last year. And now, what is my final take? These numbers, these financials really indicate that you are not in an ideal spot, but you have so much potential to make significant gains, just as long as you stay afloat and maintain your strength. There is an opportunity to profit a lot, and you will have to maintain the fight. Alright, that is what I saw. I hope you guys learned more from this video. Comment in the comments below and let me know what your thoughts are. Press like and subscribe, really appreciate you. Come join us on Discord, link in the description. Thank you for watching.